Welcome back, elite CTKS members and students. In this video, we're going to look through the cheat sheet. Our focus is to understand how risk is shaped across the economic system. This allows us to time the markets. One thing that we do, we compare all the charts to Bitcoin. Bitcoin is a very good risk-on or risk-off indicator. And we can see that when we look at stock market futures, the stock market futures have been moving in alignment with Bitcoin, but they've all been suffering relatively. And the worst performer is currently the Russell futures. Looking into commodities, we saw some really interesting things in the past 24 hours. Copper absolutely blew up. And when we look at gold, that's been retracing and it's currently a little bit of a bounce. And we can also see that silver has been trending down. Looking into the crypto market, across the past 24 hours, XRP has been the standout, followed by Doge. And the worst hit, Solana. It is actually quite weak. Gold has been on an absolute rampage, and if you're only inside the crypto market, you can buy the proxy of gold, which is PAXG, on Binance. Now, let's have a look into what's cooking with gold. In the past 24 hours, we saw that gold came up and tapped its monthly target. And that has led to a bit of a release of upper boundary levels. Now, how do you know an upper boundary has been released? You'll have this little update. So you can update to the latest version, and then that's absolutely put levels above. Now, when looking at gold, we can see this 37.92 was an area of overhead structural resistance. We did have lighter structural support at 37.76. So we came up, hit that, tried to get above it, just couldn't do it, and started to weaken. Where was our next target after we lost that 37.76? It was the 37.34 level. As it sold down, a lot of people would say gold is going to zero. Well, maybe not. But the idea is that when you get negative price action, a lot of people think that it's going to go down substantially. Actually, it's going to go to a structural level. Now, always remember, structural levels are not brick walls. They're gravitational areas. Looking into Forex, we've seen a gradual bleed out of the euro dollar, the Aussie dollar, and the pound dollar. They've all been coming down. Now we know that our friend the DXY has been going up, but the DXY has been going up with Bitcoin. It does happen from time to time. And when it does, we need to pay attention. Looking into row 1 of the cheat sheet, which is the VIX, dollar, the DXY, the DXY, dollar yen, the 10-year, the 2-year, and oil. We've seen some pretty interesting things. We saw a bit of a retracement. Now this is on a daily basis, so we're pretty zoomed out. But we've seen a little bit of a retracement in the VIX. If we continue to see downside momentum, and that could be the case, if we see that, Bitcoin and crypto and the markets, the stock market, will rally. We've also seen the 10-year just bounce a little, the 2-year bounce a little, and the dollar bounce a little. And dollar yen bounce more and oil bounce up more. Looking into row 2, which are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. Look at copper. Copper absolutely exploded. Now we're seeing some pretty interesting behavior. The main markets have been overbaked. They're just retracing, just slightly, and we've seen a little bit of retracement for the past 24 hours or so. Gold is also retracing. We know gold came into its overhead structural resistance. We know exactly why gold has done a little bit of a bounce here. The euro dollar, and by the way, there are structural trading view indicators for all of these charts. They're all separate. There's not one that does it all. And when we look at the euro dollar, that's come down as the Aussie dollar just went, I should say the DXY went nuts. And the Aussie dollar is looking pretty flat. It's looking deflated. Not deflationary, just deflated. And we've seen that silver has come down a bit, but the story is, wow, copper has really gone for it. Now, a lot of people will look for the reason, and they'll just search the news and they'll eventually find someone just explaining it in a way that makes sense to them. But the issue is, and we'll look at copper's chart. Hey, why don't we look at it now? Because the issue is structure. The news is always structure. Now, what I've done here, I popped on the indicator from the service and I've drawn SCs or shaded areas around the structure that you need to keep your eye on. Now, what happened with copper? Copper was suppressed under that 466 level, but it was also supported between the 456.80. So we had all of this structural support and structural resistance. The resistance failed, came into structure, bled back, tap structure, bled up, and what we saw here, and this is very customary, one thing that you'll find inside all markets, this is a pattern just before a breakout, this bleeding down, and it literally catches pretty much everybody off guard. So if it caught you off guard and you're in copper, don't worry about it. This is what the buggers do to us, and they do it all the time. Now, what we saw was the shorts were getting pulled in and the shorts have been liquidated, but they were liquidated up to this 482 area. Now, there's a lot of overhead structural resistance. So if you want to short copper, now could be the time, but you please must make sure that you know what you're doing. The sellers are definitely up there, and you can see this rounding out is caused by this structural overhead resistance. In other words, a lot of people, news reporters, will make a big deal about copper, but ultimately it's about structure. Just like gold, a lot of people could say about gold, but it was just coming into overhead structure. Therefore, we can watch the news and watch the structure, and the chart will always tell you the truth. The news tells you a story. Row 3 of the cheat sheet are the major market indexes, the S&P 500, the NASDAQ, the Dow, the Russell, and we're looking again on a daily basis. We've seen a little bit of a retracement here over the past couple of days, and that is to be expected. The markets were way overbaked. And what's really interesting is the Dow has been quite weak, relatively. There's a lot of misunderstandings as to what Bitcoin is, and coming from a traditional finance and banking background, I understand it. And a lot of people who are specialists in valuing stocks just don't understand crypto. But one thing is very obvious. Bitcoin, which is the blue line, this overlay here tends to feel risk on and risk off first, and it's felt a degree of risk off just of late. And long-time viewers of the show will know exactly why that is the case. I'll point to this area on Bitcoin's chart and we'll come back to it. Again, the retracement in Bitcoin is structural. It's not got anything to do with the news. It's got to do with structure. Just looking at Bitcoin quickly, up here is a lot of structural overhead resistance. Just think around that 118,000. We tried to take it out multiple times, but we just couldn't get above it. The 117,200 became very important to hold, but we lost it. We also lost the 116,200 structural support level, and that turned into resistance. Then we lost the 115,800. Now, why is this occurring? The shorts need to be drawn into the market to take out 118. As we discussed all through last week, there was very light structural support inside this particular area, so we were likely to just come down really hard until we found all of this structural support from 111,250 upwards. Now that structure has held, and it's held quite well, and we would anticipate this. And just something to understand, these areas all look like they're the same level of structure. Some are wider, some are narrower, but that's not actually the case. If I turn those SCs off and I just put on the indicator, what you can see is that it was very light structural support here and here. It's only when we started to get down lower that we had a chance of price just getting caught. And when there's a tremendous amount of panic inside a market, and that was on the cards that could happen. If you've got panic inside the market, you'll get what's called structural overshooting, or SOs. A lot of people like to zoom out and say, oh, where could this thing go? It's going to structure. That's where it's going. Now, the key is if it can't get above this 114,250 structural overhead resistance, it's going to come back to the 113 and the 112,500. And this is the thing to understand about structure. If it's not going above a structural level, it's going below. So for example, if it's not going above here, it's going to the structural levels below until it does a structural pass. When it does a structural pass, it's heading higher. Structural failures heading lower. A lot of people want to get their source of information and confidence from the news. The news is wonderful to tell you the story. If you want the truth, look at the structure. Therefore, we know that crypto is coming into a level of support. It passed through some very light structure on the way down, and that caused that structural overshooting. It needed to find structural support, and it needed multiple layers. And we also know up here in terms of this blue line, which is of course Bitcoin, there was overhead structural resistance and structural failures. The news is in the charts. Heading in to row 4, which is Apple, Microsoft, Tesla, Nvidia, and strategy. One of the things that we notice, Apple has been doing really well. Tesla has been doing exceptionally well. Microsoft, not so well, but it's moving in alignment with Bitcoin. And Nvidia is also moving in directional alignment. It doesn't have to be 100% exact, but you just have to get the overall trend. And strategy is definitely moving in alignment with Bitcoin. And you can see as Bitcoin starts to round the corner, like what is happening with strategy, it's starting to round the corner as well. It is looking a little bit weak here, just a heads up. But if Bitcoin starts to go, strategy will go with it. Getting into row 5, which is the crypto market. So total crypto market cap, Bitcoin and Ethereum. One of the things that we can see is that the crypto market has been pretty much just flatlining. A lot of people think that it's just all over for the crypto market, but there is no such thing. Typically, what retail does, retail is incredibly emotional. Whenever it sees red like this, it's a GFC, it's the Great Depression, it's the end of the world, and people listen to this rubbish, and what do? They sell. And then they find it's gone exactly the opposite way, so they buy in again. So they tend to sell here, buy here, sell there, buy there, sell there, buy here, sell there. You get the idea. It's just a whipsaw and it's crippling your account. But it's wonderful for those YouTube influencers who can say with open mouth, it's over, it's over. Oh, parabolic run, alt season, it's over, parabolic, it's over, parabolic. It would drive you nuts. There is a much better way. And of course, if you're just in it for the thrill of losing money and getting cut to death financially, well, that's a good way to go. But if you want to actually make money, you must disconnect from retail thinking. Retail thinking, unfortunately, will bleed you out. Another reason why people are not consistently profitable, they don't look at the structure of the chart. And a lot of people say, oh, Ken, I get my structure from looking at recent indicative price. If you spell out recent indicative price, RIP, it will RIP your money. Please don't do that. Again, don't do that if you want to be consistently profitable. If you want to be consistently losing, RIP is the only way to go. In fact, listen to emotion, listen to the news, do RIP analysis, and you're pretty much guaranteed of shredding your account. When we look through the cheat sheet, we're seeking to understand, is the market strengthening or weakening? And the market is definitely flatlining at the moment, except for BNB. Binance Coin is doing really well. But you can note that Litecoin has been coming down. Again, this is on a daily basis. Bitcoin Cash is relatively flat, but it's got a little bit of negative momentum. Ethereum coming down. Binance Coin outstanding. Getting into row 7, of the cheat sheet, we can see ADA, Solana, Dogecoin, XRP. Solana has been following Bitcoin's gravitational alignment, but it's not been doing too badly. Solana's been doing quite well, but it was the weakest in terms of the market in the past 24 hours. Doge has also been doing quite well. It was the second strongest. What was the strongest in the past 24 hours? It was our friend down here, XRP. When you learn Level 1 and Level 2 standard certification, you can actually draw what are called CTKS paths. These paths are forming normalized positive, normalized neutral, and normalized negative price estimates. And they're done at the start of the month in the first couple of days, and those levels are never changed. Now, why does something go up and down like this? The reason it does is because of structure. You're always drawing CTKS paths dependent on the structure that's inside the chart. And when we look at gold's paths, which were drawn at the start of the month, they've not done a too bad job of estimating where gold is pretty much right now. They're not supposed to predict price. So if you think that the path is supposed to predict where price is at any specific time, that's not their function. Their function is to predict at the end of the month where a particular price chart will be and how price will interact with structure. Again, this is not retail, this is institutional grade analysis. And I discuss these CTKS paths for every single chart inside the cheat sheet in the monthly service video. When we look at silver, in terms of the CTKS path, it's been following structure really well. For many decades, I was trading and investing inside the stock market. I was listening attentively to the news. Now, after decades and decades in the markets and being trained in finance, I can tell you that I don't listen to the news. Now, what does that mean? I don't listen to the news. Just remember when the C19 sell-off occurred, all the news was saying Great Depression, it's all over. In other words, retail get out because institutions want to buy. And then what happened? Everything did a super reversal, a V-shaped recovery. But of course, the news was saying, oh, it's all about the Great Depression. Don't get in, because the institutions haven't bought enough yet. And when did people get in? Well, around the top, and then they suffered a fairly serious withdrawal. So one thing to just understand, forget about the news. The news is from the chart. What exactly do you think news reporters are reporting on anyway? If they're looking at Tesla's price, they're looking at the price itself and trying to understand why is it doing so badly or so well, or why is it flatlining, all of those things. And for every reason that you can think a negative exists, a positive exists as well. So what do? If the price is going positive, hey, pick some good news stories. If the price is going negative, pick some bad news stories. And don't forget, price is always moving in a wave, so you're going to get thoroughly confused. That's why, if you want the news, look at the chart. And this is a real, literal game changer, because when we look structurally at Tesla, we know that around this 392.50 level was the end of that structural resistance, and the start was around, you could say, around the 418 mark. So we jump from one level to another, we consolidated. Now, when you get a big push like this, a lot of people would just anticipate it going further, but it goes into structure and it needs to consolidate until it can flip it. Now, when it flips it, it makes its way up to the next level of structure. Now, the beautiful thing with this methodology, the CTKS method, you understand the structure at the start of the month. Think back to those price paths on gold and silver and all of the other charts. They're all done at the start of the month, and Tesla has been outperforming. Let's have a look into Nvidia's case. Now remember, I was saying Nvidia was not doing that well at the current time. That's because Nvidia has so many sellers. It certainly is trying to get up there, absolutely, but it's being suppressed. Why is it being suppressed? Is it some institutional thing? Are they out to get you? Did they lie? No, it's nothing like that. It's just structure. It's important to drop the stories. The market is not out to get you. Your emotions are out to get you. And what are your emotional sources? Well, of course, they're the press, they're the financial media, they're all the influencers that say and draw you in with those terrible headlines like, "It's over, crash incoming." And you want to click that, don't you? This is why the CTKS Global family is very elite. We just don't get into that crap. And it is rubbish because it will just decimate you. For example, Nvidia goes to the moon. Oops. We already know that this is green fire. If we're not getting a structural pass, if we're getting a weakening, we know exactly when price is weakening and when it's strengthening. One good thing to remember, price is always moving in a wave, but it moves in a wave in accordance with a good deal of solid factors. For example, if we look at the crypto market, this could look really random to people who don't understand the crypto market like what we do. We know that underneath all of this is Bitcoin. Now, when the crypto alts came down like this, was Bitcoin rallying to the moon? No, it was coming down because no alt can escape Bitcoin's gravity. When it kicked up again, what did the alts do? They kicked up again. This is how the crypto market works. It is everything to do with Bitcoin, first and foremost. And you will always have some laggards, some weak cryptos, some strong cryptos. Now, which should you get into? It really depends on your strategy for trading. And don't forget, we are traders. Now, why are we traders? Because we don't do stories and we extract the values from price waves. A lot of people, a lot of retail would just say, oh, this is the weakest, it's got the best chance of doing a kick up. And whilst there's some truth in that, there is some truth in that, this is weak. Now, the problem with the crypto market, if you get into something really weak, its weakness can bleed you 3-to-1, 4-to-1 of what a strong crypto would do if it's retracing. So you've got to be really careful and guard your capital. I would always suggest that you go for strength rather than weakness. I said this pretty extensively inside the masterclass. And one thing that you've got to keep your eye on, when everything is green and everything is fantastic, yes, you can ride the wave up and you can make a lot of money as an investor. But typically what happens is people are called in when they feel absolutely certain that the price is going to continue to go up. And that's typically when price is starting to roll over. This is very common, and unfortunately it's got to do with certainty. People want certainty. The only thing that you can be certain of is when you have certainty, you are probably certainly wrong. Traders always focus on downside risk and the minimization to their capital of any drawdowns. If you're stuck, for example, if you went into SUI and it was just doing so fantastic and you said, oh, now's the time to go into SUI. I'll buy that dip and I'll go in, I'll put everything I have and more into it and I'll leverage. And then it comes down 70%. You're going to have to sell at some stage. And it was probably right there that most people would sell. Now, what happens? As soon as people capitulate and get out of the market, things start to rock and roll. So people are drawn back in only to get hammered again. Traders know that this is the reality of the market. That's the difference between investors and traders. Investors look at this. Traders look at this. Now, why is that? Because we're going short? I don't even do shorting. I only do longs inside the market. If you want to do derivatives, you can long, you can short, but it's a really good idea to be an expert at spot before you do anything. And what do we see here? Yes, you can do really well, but you can give it all back and more. Do really well, give it all back and more. Literally, some people get wiped out because they get so excited They see a green fire candle, a God candle like that green one in there. They just go absolutely nuts. They put their house on the line. They just borrow money from friends and family, and all of a sudden it halves. Traders don't get caught in this kind of thing. That's why we're traders. Now, what happens when the markets get choppy, when the market's going up and down like this? Of course, this is on a daily basis, and this is looking over quite a period of time. But the markets are always moving in a wave. They're always going up and down. As traders, we take advantage of that. We're very risk averse. You've been told that traders are risk seeking. Professional traders are absolutely and utterly risk averse. They refuse to be caught in things like this. So this is something that you want to keep in your mind. If you're an investor, you'll probably retrace every gain. You'll move in this kind of a triangle all the time. And as a previous investor, I was moving in triangles like this, and I said, damn this, I don't like this. This is just not on. I'm going to trade. And trading is a powerful way of sidestepping weakness. You've been told a lot of lies about how investing and trading works. Investors say that you can't time the market. Of course you can time the market. If you know intercorrelation, if you know the structure, of course you can time it. But it requires more thought. And that thought is something that most people don't want to put in. They are very happy to do that triangle of losses because that's somehow easier. It's not easier at all. When you think about financial markets are very dangerous if you don't know what you're doing. And you really must understand intercorrelation first and foremost. It will help you to understand how the markets are changing. Always remember that the charts will tell you the news, and if you know what chart to look at and how to interpret it, you're like a tracker who can track somebody through the desert where other people only see sand and twigs. You can see a path. Now, when we look at the VIX, the VIX is the fear gauge of the main market. When we look at Bitcoin, which is the blue line, and the VIX, which is the candlestick pattern, what do we notice here? Is there any relationship between the VIX and Bitcoin, for example? Well, you can see it's a pretty good illustration of why Bitcoin is currently going through a degree of weakness, because the VIX started to come up. Now, when the VIX comes up, that places weakness inside the crypto market and also the stock market. But we've seen a lot of strength inside the stock market. That strength has been overshot. It's now starting to just come down a little. But we've seen just recently that the VIX was growing in strength. So I've just zoomed in. Now, what do we notice here? The VIX is starting to decay. That's a really good sign, and it's starting to weaken. Now, this means two things. As far as the markets are concerned, the crypto market is concerned, that is ultra positive. When you get a cut like this, this is exactly what we're looking for. Now, don't forget, it's going to all move in terms of waves. But when the VIX goes up, gold goes up. And when the VIX comes down, gold typically goes down. And crypto comes up. Now, just remember, when we get a decrease in the VIX, we typically see an increase in Bitcoin. You see the little number is on the bottom, the big number is on the top. This is a normal scale for Bitcoin. So what does it look like just done the other way? If we invert this price scale, they tend to move together. Now, they don't need to move together 100% perfectly because Bitcoin trades 24/7 and the VIX is quite sleepy in that way. But we would anticipate a bit of a turnaround in crypto for the next 24 hours. And you can't just look at the VIX and say, oh, this is my be-all and end-all of life. There's a lot more to it. But when you become more and more professional and you start to see that the news is inside the charts and how the charts all interrelate to each other, you can just move away from getting cut to death and start to understand how things actually work. Thank you for joining us in this particular video. Kate and I are so appreciative. And we look forward to catching up with you again in the next video. Bye for now.